What's going on, everybody? What's going on? What's going on? I apologize for it taking me a little bit longer than normal, but I still appreciate you all for, tapping into another episode of the Trade for Yourself podcast. Um, this is a late one. This is a late episode, however, we have to make sure that we still get the information out to the people and make sure that I continue to add value to you guys. So, for anybody that's tapping in, late, live on YouTube, I appreciate it. Anybody that comes on or listens to it after the fact, hey, I appreciate you all as well. Because at the end of the day, we want you to be successful. And so, hey, let's go ahead and get into it. I don't want to belabor the time because I want to be very succinct with what I've got tonight. So, again, welcome back to another episode of the Trade for Yourself podcast, where my mission here is very simple. I just want to help you all learn how to trade and invest in the stock market for yourself. So make sure you please like this, please subscribe. Make sure you hit that notification bell so you can be in the know every single time I come live on an episode at around 9:22 p.m. Central Time. Okay, so just understand that, I can come on live at any given time whenever it's time to provide information and provide value. All right, so the Federal Reserve holds rates steady for the stock market, or Jerome Powell holds rates steady. And so most of this episode, I'm going to be spending time looking at the charts. Okay, that's what I'm going to be doing for most of this episode. But the main thing I want you to understand about what the Fed said on today was that Jerome Powell is going to be holding rates steady. In the first quarter of 2023, we were dealing with a lot of inflation, a lot of, higher than expected inflation, and it's taken the Fed a while to get closer to that 2% target. But Jerome Powell is pretty much just letting everybody know that he's going to keep the status quo, right? He's not going to raise interest rates. He's not going to lower interest rates. He's going to hold rates steady because he needs to make sure that we see the progress that we need to see on inflation for him and the Federal Reserve to feel comfortable about lowering interest rates. But hey, it's going to take some time for those interest rates to get lowered, right? It's going to take time, but he still let everybody know that they will not be raising interest rates, which is a very, very good deal. That's exactly what the market needed to see. And I'm going to go through the charts because I want us to look at the charts because I see some opportunities out there that we may be able to take advantage of in some short-term situations and some long-term situations. But I wanted to bring the Fed up because I want us to understand and make sure that if the narrative changes in the market, we need to be prepared to shift with it. Do not stay in one position if the market starts to shift. So we need to just pay attention with what's going on so we can take advantage of this opportunity as we get into some good seasonality times for technology in the summer. All right. So I'm going to go ahead and share. I'm going to go ahead and share the chart, right? We're going to go ahead and get into these charts so we can go ahead and add value to you guys on the technical side. So I've got the S&P, I've got SPY pulled up, right? I've got SPY pulled up, which tracks the S&P 500. And this is a monthly chart, okay? This is a monthly chart of SPY, which tracks the S&P 500. As you can see, we are in an uptrend, right? We are in an uptrend. This is a monthly chart. We had November, December, January, February, March. We had 5 straight green months, okay? We that was amazing, right? We had an amazing run, but we had a big red month. We had a big red month in April. We had some bad weeks, in April, but we came down to this 493.86 level, and that was the lowest that we got. That was the lowest that we got. We didn't quite retest a previous high. We did not quite retest a previous high, but we came down pretty substantially. Now, the month just ended on yesterday. Today was the first trading day of the month of May. And so it was very volatile, and we were up to around 508.19, 508.19 today, but we ended up closing around 500. We closed at 500.35. So that just lets you know how volatile that we were because of what was going on during trading. Okay, we were very, very volatile in terms of what was going on during trading. Okay, let's go down to the weekly chart, right? So this is a weekly chart that we have. We're talking about, we started off great, right? We started off great for 2024, but we had 3 down weeks, 3 big down weeks in April. Had a green week last week, but now we were red ending those last few days in April, right? So, you know, the market is trying to figure some things out. There's been some rhetoric changes around inflation and things of that nature, but Jerome Powell told us that they were going to hold rates steady. Okay, so let's come down to the daily chart, right? We come down to the daily chart. This blue line right here represents the 50-day moving average. We are now below the 50-day moving average, and we are doing some consolidating, right? We came down, we sold off 1, 2, 3, 4, 5, 6 days in a row in the middle of April. We sold off 6 days in a row, but we're chopping around. We had some green days, had some red days. We sold off heavy on yesterday. Jerome Powell spiked us up to $508.19, but again, we closed to 500.35. So, what I want us to understand is that Jerome Powell told us that they were going to hold rates steady. And I believe that that's going to provide the stock market some relief for now. As long as we don't hear anything else negative on the inflation side for the moment in time. The reason why is because we had some pretty good earnings, right, over the last couple of weeks. Microsoft had some good earnings. Google had some good earnings. Amazon had some good earnings. AMD met expectations for their earnings, and they had good earnings in relation to their AI chips. Qualcomm, they had earnings today. They had good earnings, right? We're going to hear from Apple tomorrow. We're going to hear from Coinbase tomorrow. So the S&P 500, for the most part, has been giving us good earnings. And so what we had to do is we had to get through this interest rate decision, right? We're going to have to get through the jobs number that's going to come out on Friday. We're going to have to get through all of this particular situation, right? All of this volatility, because when you see a stock go from 508.19 all the way down to as low as 499.87, that tells you that we are dealing with a lot of volatility, right? And so I wanted to present this just to let you know that, we're still in a bull market. And I believe that we could continue on the uptrend, but we have to make sure that the market doesn't pull a switcheroo on us. So we have to be tapped in, and we have to make sure that we do not fold. Okay. We are in a bull market right now, and we need to be looking for opportunities. However, if if the market starts to sell off, if you are in some calls, if you are in some long dated calls, you need to be selling your calls if we get to a situation to where the market is not liking what is going on. There's plenty of opportunities out here to be buying stocks long term. We're going to talk about those stocks, but I'm telling you, Jerome Powell told us that he was going to hold rate steady, which is good. That's going to give the stock market a little bit of relief, but we have to make sure that the data remains in our favor if we're going to continue to ride in this uptrend. So I'm not telling you to sell anything. I'm just telling you to be careful, keep your head on a swivel, and be prepared for anything that happens, right? So let's go ahead and get into these individual names, okay? Let's start with Apple, right? Let's go ahead and start with Apple. Now, Apple has been in a heavy downtrend, okay? A heavy downtrend, right? The blue line is the 50-day moving average. This yellow line is the 200-day moving average, right? Apple experienced a death cross. Okay, what is a death cross? Is when the 200-day moving average crosses above the 50-day moving average. That indicates that a stock is in a downtrend and it is not on its way back up, right? That's what that indicates. However, I do believe that Apple has been consolidating for a while, right? It's been consolidating for a while. It got as low as $164.08. We're going to hear from Apple. We're going to hear from Apple tomorrow on its earnings call. We have to see what Apple says, but I believe that Apple will not get much lower than where it is right now. So, from a long-term buying opportunity, I think that this is a great time to be buying some shares of Apple. From a trading standpoint, we need to see some more positive movement in order for us to say, hey, we feel good about trading this stock, buying calls, things of that nature. But from a long-term standpoint, it's a situation to where, hey, Apple, I don't think it's going much lower. And I think that this quarter may not end up being that well. And hey, that negativity may already be baked into the stock. So just pay attention to what Apple has going on tomorrow, and we're going to see what we're going to do with this name. All right, let's go to the next one. Microsoft, right? Microsoft had great earnings last week. It had great earnings last week, but Microsoft has been selling off, right? It's sold off over the last few weeks. However, it's not fell below this $388.03 level, right? It has held support there. It has came down, tried to test it, but it has not broken through. I think that we may have an opportunity right here in Microsoft. Okay, we might have an opportunity here in Microsoft for Microsoft to continue to move higher because of the fact that Microsoft had good earnings. It had good earnings. It's been in that upward momentum. It's below that $3 trillion level, and I know that it wants to get back above that $3 trillion level. Microsoft is one of those ones that we need to be paying attention to. This could provide us an opportunity. Full disclosure, I am in a call for Microsoft right now out to July, right? $395 call out to July. And hey, this is one of those ones I still believe in. We have an opportunity because of what it did during earnings. So keep this one on your watch list. This one may provide an opportunity for us. Amazon. Okay. Let's take a look at Amazon. Now, Amazon had great earnings. Amazon had great earnings. It's been doing some choppiness, dropping, rising, things of that nature. The stock was as high as $185.15, but it ended up closing right around $179, which it was still positive on the day, which was a good thing. And Amazon, I believe that Amazon is getting very, very close to having an all-time high breakout. The stock got above that all-time high of around $188 to $189.77, but it has not gotten back to that point. And we got the earnings that we needed in order to be able to get this one to move higher. We're right around that 50-day moving average. I believe in Amazon, and I believe that you need to pay attention to this one. We can go long on this name, in my opinion, right? NVIDIA, okay? NVIDIA, the darling, right? The AI darling, okay? NVIDIA seems to be forming an inverted head and shoulders right here on the daily chart. This is what NVIDIA is kind of showing me right now, showing me the potential for an inverted head and shoulders. NVIDIA has been rising, and it's been rising significantly, but the stock can still keep going higher, right? NVIDIA is going to have earnings in a couple of weeks. We're going to hear from Jensen Huang and the company, but this is a stock that I wouldn't be shorting. I wouldn't be trying to short this stock. I think that opportunities still lie in this name. This is a very expensive name from an option standpoint, but from a share standpoint, if you're holding this one for 5 years, on a discount, this may provide you an opportunity. So just keep this one on your watch list, watch NVIDIA, see what's going on. Google, right? Let's look at Google. Google had earnings, right? Had great earnings, announced the dividend, the first ever dividend for the company. The stock went up to $174.71. And we have this gap here, right? We have this gap here. The stock opened up at this high, and we have not seen this high since. We haven't seen this high since for Google, but I believe in Google, and I believe that Google is going to continue to ride. I would feel comfortable about getting in Google if it came down to this 160, 159 level, or if it completely filled this gap. I would be ready to get into Google, trading it back to the upside if it were to completely fill this gap. Okay, this would be great if that could happen, because at the end of the day, the stock is still in an uptrend. The stock had great earnings. It's just the stock had sold off. Pay attention and watch Google. We need to watch Google because some opportunities may present itself for Google. Tesla. Oh, Tesla, right? The stock that nobody likes, correct? The stock that has a volatile CEO, all those things, right? But it's still a stock that I believe in for the long term. This stock was at $138.80, y'all, and the stock got as high as $197.37. So the stock hit its 100-day moving average. I didn't tell you all this, but this orange line, this is the 100-day moving average. So as of right now, we're above that 50-day moving average. If Tesla were to come down and complete this gap fill, we may want to consider riding this one up, because the story and the story around this name is starting to change a little bit. Now, Tesla does have a gap right here that it does need to fill, but we don't know when that gap would be filled. But what I'll say is just be careful with this one. Be careful with this one. See how the stock continues to trade over the next 2 to 3 days, maybe over the next couple of weeks. This is going to provide an opportunity for us soon, very soon. Just pay attention to it. AMD. AMD, right? A semiconductor company that I believe in wholeheartedly, right? AMD dropped after earnings. It dropped after earnings due to some negativity in their gaming segment, right? AMD had some negativity in their gaming segment. That's why it came down. However, in terms of AI chip sales, AMD did 80% year over year increase in terms of AI chip sales, and they raised their outlook for the next quarter and the year for AI chips. This is a stock that we need to be tapping into over the long term. This stock was as high as $227.30, and this stock is approaching the 200-day moving average. This stock is not going to go much lower than what it went today. The stock dropped 8.9%. I believe everything is probably priced in at this point. We need to consider buying this stock for the long term, because everything is good about the company. They've got good management. The balance sheet is solid. They are in the growth industry. They may not be number one over Nvidia, but they're clearly number two. Lisa Su and Jensen Wong, they're first cousins, okay? You need to understand that AMD is one of these stocks that we need to pay attention to. And this is one of those stocks that is providing a massive buying opportunity. This stock is providing a massive buying opportunity right now for us at this moment in time. All right. CrowdStrike. CrowdStrike, a cybersecurity name. Okay. CrowdStrike was at $365 in March, but it has been selling off ever since. It's been selling off ever since. CrowdStrike is the best cybersecurity company on the stock market. This stock is actually primed to be included in the S&P 500. It is now eligible, but we have not got that announcement yet. This is a great opportunity to buy this stock over the long term, and I believe that this stock still has some juice to go to the upside in the short term as well if you wanted to trade this name. We just need to be careful with the cybersecurity companies right now, because they sold off because they ran so much. But again, CrowdStrike looks good right now from a long-term perspective, and we may need to consider this from a trading perspective as well. I've got some calls on it right now. I'm not trying to recommend it at this moment in time, but what I do want you to do is just to pay attention to what's going on, because this one is going to provide some opportunities for us. I promise you. I got two more, guys. Two more I want us to look into. XLK. XLK, this is the technology ETF of the S&P 500. Now, XLK made a high of $212.35, and it has since been selling off. It has since been selling off. But what I do like is that XLK came down and it filled some gaps. It had some gaps that it had to fill, and it came down and it filled these gaps. This is a stock right here, guys, that is going to go higher, right? It's going to go higher. It has Apple in it. It has Microsoft in it, right? It has Nvidia. All the technology stocks are in this particular ETF. This stock is going to go higher, okay? If the market is going to make another all-time high this year, is going to be because these companies are going to be participating in that effort, right? So this is one of those ones where you need to be paying attention to it. Like we know that Apple's been selling off a lot, and we know that Microsoft sold off quite a bit. That's why we're seeing the stock having this negativity right now. This is providing an opportunity. Consider this one to be adding to your portfolio. The last one, XLY. XLY is the consumer discretionary ETF of the S&P 500. I consider this particular stock to be a two-headed monster. Number one, Amazon. Number two, Tesla. Tesla is trying to revive itself right now, y'all. Tesla's trying to revive itself. Amazon's good. Amazon had great earnings. I have no doubt that Amazon is going to continue to rise. If Amazon and Tesla start moving together and they start moving in an upward trajectory together, this stock is going to get back to $185.29 easily. I have some calls. I bought some calls somewhere up in here around March, and I averaged down here at the bottom around April. This is where I averaged down. This stock again is going to provide us some opportunities because of the two-headed monster that we have in this particular stock. Look into it. Do your research in this one. I like it. It came down past the 200-day moving average. We're now above the 200-day moving average. It may come down and retest it. That's another buying opportunity. We're just trying to see what this stock is going to be doing technically. I'm telling you, this one right here, I believe if Amazon is going to have an all-time high breakout, this one will. If Tesla starts to participate, this one is going to 100% do well for us. All right. And that's all I got for us today, y'all. Came on, wanted to come on, tell you what Jerome Powell said. Wanted to come on and just give you the technical analysis of what was going on and provide you some opportunities, let you know some positions I'm in, things of that nature. We have an opportunity to take advantage of what's going on, but we have to be prepared if the market wants to continue to sell off. We do not want to lose money unnecessarily and stay into positions too long. We do not want to do that, and we want to be fluid. We want to change with the market. Right now, I'm really speaking from a trading perspective right now. From a trading perspective, people trading calls, people trading puts, things of that nature. From a long-term perspective, we obviously need to be buying shares, right? We need to be buying shares right now of many of these companies that I present to you here on tonight. But from a trading perspective, we need to watch the technicals, see what happens tomorrow, the subsequent days after we get these Apple earnings, after we get Coinbase earnings, after we get the employment data from the previous month. Get all the data, and then we're going to go out here and we're going to make some money, and we're going to take advantage of these opportunities and build this wealth, trade, do what we need to do. As always, I appreciate you all for tapping into another episode of the Trade for Yourself podcast. Remember, don't pay for it. Trade for it. I'm here for y'all. You will hear from me again next week, y'all.